Welcome to the February 12th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace, as well as offers some insight as to how we set up our charts, what time frames and indicators we use. We're going to run through a few broad market averages, then we'll dive into current open positions in the model portfolio, and finally, we'll take a look at what's out there in terms of new setups. First up is the Nasdaq Composite. After Wednesday's big volume stalling session, a bearish candle, after a sharp 8% move up in 2 weeks, we'd expect the Nasdaq to, at least in the short term, chop around, either correct by time with a shallow correction here, allowing the 10-day EMA to catch up, or by price where it breaks Wednesday's low and pulls back in or undercuts the 10-day EMA and potentially even tests the 20-day EMA. Which scenario will play out, we don't know. We just know that the odds have increased for more chop in the short term. On the weekly chart, 2 weeks ago there was a bearish engulfing candle, and that was immediately negated by the following week's price action, which took out the prior week's high. So the weekly chart looking pretty good, still in trend mode above a rising 10-week MA. In the S&P 500 on the right hand side to the weekly chart, the same scenario with the price action taking out the high of the bearish engulfing candle. And on the daily, much like the Nasdaq Composite, we have 2 days of stalling here at the highs after a sharp advance off the 50 MA, which again increases the odds for chop in the short term. But overall, both these indices are healthy and the current market rally is in pretty good shape. Open positions, we have FTCH, which we put on above 68. We're looking for fall through above 70, which would be a breakout to new highs. And on the weekly chart, we can see this tight consolidation here, and that would be a move to all-time highs. So we have a nice base here, and we're looking for some fall through above 70. CRWD, we're long from an entry on 2.4 around 224, and we'd like to add to this position if it can break through Thursday's high. And on the weekly chart, we see a 15% pullback over 1, 2, 3, 4 weeks. That found support at the rising 10-week MA. That's a pretty nice consolidation. And the RS line is in pretty good shape here near the highs and would likely move to new highs along with price if there was a breakout. Tesla, we're long from an entry on 2.2 over 840, looking to play that pullback off the 20-day EMA. And what we're looking for is for Tesla to form a higher low here and recover back above the 20-day EMA within the next day or two. Our stop isn't much lower, but if Tesla can hold above 800, we'd look for a break of this downtrend line as a spot to add. NIO, we're long from an entry around 59.48. Thursday's pullback was on lighter volume, which is a positive sign. We're looking for the price action to stay above the 10-day EMA and the low of 2.9. And the last stock is CDOC. We're long from entries around 230 and an add around 270. We sold 1/3 of our position around 285 to lock in a 15% gain. We have a stop beneath the reversal candle on Wednesday for another third. And then we lowered our stop to the prior swing low for the last third. As for potential setups during the next few days, we are looking at CELH on a break of this downtrend line. Note the tight range consolidation above the rising 10-week MA on the right-hand side here. Earnings are 311. That's not confirmed. SQ is in play on a breakout above this bull flag-like pattern here. MRNA, it's a big base here. The price action stalled on 129, false breakout, pulled back to the 10-day EMA and held. Then rallied about 20 or 25% before stalling just above the prior high, and has now formed a bull flag-like pattern on declining volume here. So Myrna would be in play above 185, possibly 186. DDOG reported earnings after the close. Didn't do much though. However, if the price action can get above swing high, that would also be a breakout to new highs. And that would be a buy signal, especially if the volume's there. Chewy's also in play. If it can get through the swing high around 113. Plug, looking at the weekly chart, this is a pretty tight consolidation over 1, 2, 3, 4 weeks. After a very strong move off the 10-week MA, this is a 130% move or so. So the price action is pretty strong. Not a deep correction here. Only 22% off the highs, which is impressive given that, as I mentioned before, it was about 130% move up. So very tight consolidation. Needs to get above the $70 area to be in play. Also like the light volume here, the dry up in volume during the chop. And the final chart of the night is PTON, which is a big time market leader. Formed a nice cup during the last few months of 2020 and then broke out just before the new year. The breakout, there was some volume on the breakout, but it failed to follow through and has been in chop mode ever since. And if PTON can get back through the 10-week MA and the 151 area, it could be back in business. So just a quick wrap up. Market conditions are a bit volatile the past few days as stocks digest the gains over the past few weeks. And the major indices may be in for a few more days of sideways to lower price action. But overall, the current rally remains in pretty good shape. And we continue to see new setups develop and breakouts are still working. So that is a good sign. Thank you for joining me. Have a great weekend and we'll see you next week.